What's going on, guys? Welcome back to the channel. Walter here, and it's your weekly mortgage and housing market update. And today we're going to be covering three topics: stories that can impact your home buyers and retirees out there. So, why move up buyers are choosing smarter homes instead of bigger ones, and where mortgages are headed for the rest of 2026, and why financial advisors are changing the way they think about reverse mortgages. So, we're going to go ahead and jump right into it. So this first article is brought to you guys by homes.com. So if you've been thinking that everyone wants a bigger house, which is possible, new data is suggesting that it's no longer the case. According to homes.com here, many move-up buyers are now prioritizing functionality over square footage. Instead of paying more for extra rooms they rarely use, buyers are focusing on features that improve everyday living. Things like dedicated home offices, flexible living spaces, larger kitchens, energy efficiency, and lower maintenance costs. The trend is also influencing home builders. So KB Homes says that it's doubling down on its built to order strategy rather than constructing large numbers of speculative homes. The company is allowing buyers to personalize homes before they're built. So this reduces the risk of builders while giving buyers more control over the final product. So many for my buyers out there, this is an important reminder that don't assume bigger automatically means better. The right floor plan that fits your lifestyle can often provide more value to you than simply adding square footage. So now that while my buyers out there are changing what they're looking for, affordability is still the biggest issue and that brings us to the mortgage rates. So Zillow says mortgage rates have remained remarkably steady despite a mixed economic picture. So their forecast expects a 30-year mortgage rate to stay around the mid sixes range through the summer before gradually easing towards roughly 6.2 by the end of the year. Not a dramatic drop, but it's a slow improvement. Yeah, I know 6.2 sounds a lot better than some of the rates that we're seeing now. So what does that mean for my home buyers out there? If you've been waiting for those rates to suddenly fall into the low fives, that might not be happening anytime soon. Instead, today's market is rewarding buyers who focus on affordability, negotiating seller concessions, or refinancing later if rates improve. So the key takeaway is that timing the market perfectly is extremely difficult. Buying when the payment fits your budget is usually more important right now than waiting for the perfect interest rate. So, with that being said, mortgage rates just aren't affecting buyers. They're also affecting how retirees think about how the equity that they've built over the decades is impacting them. All right, and so moving on to the last section here, Housing Wire just released this. Mortgage rates have carried a negative I mean, not mortgage rates, reverse mortgages have carried a negative reputation for many years, but that perception is starting to change. So Housing Wire has recently highlighted how more financial advisors are beginning to include reverse mortgages as part of the retirement planning rather than viewing them as a last resort. One advisor estimates that 33 million households could potentially benefit from incorporating a reverse mortgage into their retirement strategy, yet only about 25,000 federally insured reverse mortgages close each year. For the right homeowner, a reverse mortgage can help eliminate monthly mortgage payments and provide access to equity and preserve retirement investments during market downturns or create additional cash flow. So, of course, it's not the right solution. It's not a one size fit all, but every homeowner's situation is a little bit different, which is why it's important to understand both the benefits and the trade offs before making this kind of decision. So, with that being said, today's recap, buyers are focusing more on functional homes rather than larger ones. Mortgage rates are expected to remain relatively stable with only gradual improvements throughout the year, and reverse mortgages are increasingly being viewed as a legitimate retirement planning tool rather than simply a loan of last resort. So if you're thinking about buying a home, refinancing, or simply want to understand what your options are for reverse mortgages, happy to help. If you found this video helpful, please like and subscribe. We'll see you guys in the next one.